Greetings guys, Joseph James here once again with your nightly newsletter brought to you by SchoolTrade.com. Today was November 5th, 2009. Thursday here in the morning. We had a couple big important news events this morning, 8:30. We'll talk about that a little bit later on this morning. Before we talk about the trades we took today though, I want to remind you guys about our free resource online. Head to our YouTube page, subscribe to our YouTube channel while you're there, and please rate and comment on this video. We had to be patient this morning. Low volume day in the market. Of course, after FOMC day. We put 8 ticks in our pocket off crude, 80 bucks in our pocket, not really much to work with, and of course we'll show you guys those trades a little bit later. 80 bucks today, that brings 1,200 bucks this week so far. Over 50,000 guys in this room since May. As you guys know, we're coming off that big month of October last month. We'll keep you guys posted. The term of the day today is mental versus physical stop loss. Now we talked about this in the room this morning, kind of a new term here. We have a mental stop and a physical stop. What are going to be the differences and why do we use them? Well, first of all, we always use a stop loss, okay? Always, always, always use a physical initial stop loss to protect against unexpected moves, right? This is when the market moves out of your control. I still hear guys say I don't use stop losses, guys, and I'm still wondering why people don't use stop losses. So use stops. There's a difference, though, between a physical stop and a potential mental stop. Now, the physical stop, we use about 6 ticks. It's placed in the market for protection, so when I get long in the trade, I place a 6-tick stop. That means if the market goes out of my control, 6 ticks against me, I will then be forced out of the market, right? So it's kind of a safety net, right? That physical stop, 6 ticks back. However, though, my attitude is that you should never need to actually take that full physical stop. In fact, we should be looking for things in the market to tell us to cut that loss early. So we have what we call a mental stop. Now, this mental stop is a level where the trade becomes pretty much invalid. Right, we rarely ever see a price go -4 against us and then go +4, +8, right, +20. We very, very, very rarely ever see a trade that goes against us, right, 4 or 5 ticks, and then miraculously decides to go back in our direction and makes us money. If it does, it's very few and far between, and it's usually a very small winner to begin with. So the idea of letting your losses run, right, and letting that 6 ticks get filled with the intention on potentially seeing it reverse, right, very rarely happens. If you don't believe me, check it out yourself. Look back over the last couple times you guys have seen a trade go 4 ticks against you, and tell me if it went 4 ticks, did it more oftentimes go 6 ticks and stop you out, or did it reverse and go make you money? Very rarely does it reverse and make you money. So we're looking for that mental stop. That's where we identify where that trade becomes invalid. We watch some specific indicators for an exit on this mental stop. So again, I'm going to place my physical stop 6 ticks back, but I know I'm very rarely ever going to need that full 6 ticks. I will usually jump out 3 to 4 ticks before I even have to get there. Now guys, here's what we look for on your mental stop. I'm watching price action. So I'm watching my time and sales window, my pace of the tape indicator, my trade management chart. I'm looking for price action to slow down, and then I'm going to watch for indicators to move against my position for an early exit or to maximize profits. In this case, it's an early exit. So we're looking for a combination of 3 things. Now, on your trade management chart, you'll see we have a MACD indicator. That MACD, even though a little bit different than most MACDs, still used the same way. If it curls against my trade, right, if I'm long and the MACD curls down below the 0 line, that's 1 strike against me. If momentum now on my fast time frame, if that curls against my position, there's a 2nd strike against me. And then last but not least, if I see the pace of the tape indicator trading red, that means we've got slow price action, momentum curling against me, which means I should probably look to get out of this trade before I see a stop loss. So again, guys, physical stop, 6 ticks back. Mental stop, 3 to 4 ticks back. We're watching price action, and I'm looking for MACD, momentum, and the pace of the tape all to go against what I use to get into the trade. Right? Remember guys, to take a long trade, I would want MACD, momentum pointing up, and the pace of the tape green. To exit that trade early, it's the exact opposite. Pace of the tape is red, momentum curls back down, and MACD follows. So remember guys, a mental stop, very easy to use if you know what you're looking for. And again guys, we're always going to show you guys all this stuff live in real time in our trade room. So come out and join us and ask questions about mental stops and physical stops, and we'll be sure to answer those questions for you. We'll be trading the U.S. session tomorrow, guys, 7:45 a.m. Eastern Time. We'll be closing up just after noon time, 12:30, 12:45, whenever the questions run out. We'll always answer the questions you guys have. Don't forget, guys, on Tuesdays and Thursdays, we do free webinars. Tomorrow's a Friday, so no webinar tomorrow. Our next free webinar will be on Tuesday next week at 11:30 Eastern Time, right in our trade room. Also want to remind you guys the beginner's course is highly recommended for all free trial members. Now, let's finally talk about some of the trades we took today. Now, as you guys heard me say before, we were expecting some good volume this morning. We had jobless claims at 8:30, right? Today's a Thursday, so we expected to see jobless claims, continuous claims. We, of course, being after the third quarter closed last month, we also had quarter three production, quarter three unit costs. So we were expecting to see a lot more, kind of a jump start to the market at 3:30, but it never came. It never came. So we had to pretty much wait patiently for the market to speed up, kind of get out of bed this morning and give us some trades to take today. Now we took our first trade of the day here. It was a small winner. Now I'll zoom in this for you guys here just after 10 o'clock. Now this is a great example, ladies and gents, of how we really follow our rules, and our rules can do the trading for us. Now our rules tell us that as price was breaking above this high of the day here, you'll notice these horizontal red lines there. That was at 72.5 on the Russell. Now the high of the day there was about 73.25, 73.2, 73.3. You'll notice, guys, we had a breaker long setting up here, but we didn't have the green pace of the tape at the high of the day. In order for me to take a long trade into overhead resistance as high profile as the high of the day, I need to make sure I have strong price action. I need to make sure there are lots of people participating to, of course, give me the benefit of this pattern working out. So the biggest fear I have is buying into the high of the day on decreasing speed of the tape. And that's exactly what we saw here. We didn't have the increasing, strong, consistent green pace of the tape that would tell us that we should be taking the trade, right? Strong price action. We saw red pace of tape. We saw yellow pace of tape. So what we did was we decided against the breaker long, which of course was higher risk because of that high of the day overhead and the slower price action, and we opted for the counter trend, which was the two-step short. So the trend continuation pattern here was the breaker to the long side. That was disqualifiable, or a little bit higher risk than we like to take because the high of the day and the slow price action. We then immediately look for the opposite direction for a two-step short. Counter trend trade now, and you can see, guys, we marked up that swing low here. That swing low is at 73.4, and of course that swing low, that horizontal blue line right there, we then waited for the break below that blue line to take this two-step short. Entry there was at 73.1. We took 4 ticks for our first target, and as you can see right there in front of you guys, it came down and then jumped right back up. So kind of a choppy move there, but we were able to grab our first 4 ticks target. We took 2 off at the first 4 ticks, which locks in 8 ticks, which is $80. So there's your $80 for the day. We then, of course, looked for a second trade here, not too long later, but a half an hour later, still in the Russell here. This was a very similar pattern, a two-step short once again. Price tried to go test that high of the day once again there, just above that 74 even level. And of course, once again, we saw the sellers take over, and we looked for a counter trend trade in a two-step short. Now, guys, this is a great example of how a mental stop, rather than a physical stop, is going to be more profitable in the long run. Because this two-step, I exited early by simply moving my stop from 6 ticks back down to my point of entry when I saw a couple things happen. Now, at this point in the game, we were looking at the 10:30 news event right around the corner. So my alarm went off at 10:25. That was the first big concern. Then we saw at the bottom of your screen there, momentum began to curl up from the bottom, right? Just before we took the trade, momentum began to curl up from the bottom, right? Not a good thing to see. And then after getting the trade, we saw the price go from green to yellow to red. So I had red pace of a tape, right, which means slow price action. Momentum curled up, which of course is against my short trade. And I now have to deal with the fact that I'm now less than 5 minutes to the news event at 10:30. All were good reasons to get out of that trade early and protect my capital. And all I had to do, guys, because I was a couple ticks in the green, I simply moved my stop down to my point of entry and locked out all that risk. It took into my stop, got me out of the trade, and as you can see, just in time for this thing to reverse back up against me. The mental stop, of course, made this a 0 loss instead of a 6-tick loss. Again, protecting capital. Remember, guys, that mental stop should be used when we see those things curl against us, right? Momentum, price action slows down, and the MACD curls, and we get out of that trade early. All right, guys, so good example today on how we use mental versus physical stops. All right, $80 in the market today, guys. Room opens up tomorrow morning at 7:45 Eastern time. Come out and join us tomorrow, 7:45 Eastern. We'll do free webinars on Tuesdays and Thursdays. Plenty of time and opportunity to ask questions, guys. So bring your questions tomorrow. We'll do questions all day long. We'll give you a free 3 weeks as part of our trial. And guys, please rate and comment on this video. Grab a copy of the beginner's course. My name is Joseph James. For more information about lifetime membership, that's right, lifetime membership, drop us an email, sales@schooloftrade.com. And guys, thanks for joining me this afternoon. We'll see you guys tomorrow morning. Don't miss a tick.